Good morning, everyone. My name is Chris Van Dyck. I'm an attorney at Cogent Law, and we are delighted to have as a guest speaker today Ryne Cornacchia from Wolf & Co. Ryne and we are here to talk about cannabis banking and more particularly how to launch and scale your cannabis banking program without sacrificing compliance. And I'm going to Ryan and I met at a conference, the Shield Connect conference down in Boston a few months ago. And what he does and what I do, we have a lot of synergy together. And we thought it would be a great idea to present this webinar to folks. And I want to thank all of the attendees, by the way, for coming to this webinar. It's so important to be talking about this evolving, changing area of banking. And so we appreciate your attendance. And Ryne, I'm going to let you talk a little bit more about you and your background, and then also Wolf & Co. Great to have you with us, by the way.
Awesome, Chris. Thank you very much for inviting me to join you guys today. So, like Chris said, I'm with Wolf & Company. I've been with them for about 2 years. We're a Boston-based CPA firm, specializing really in the financial institution world as well. I work specifically in the advisory group where I manage a team of consultants. We do a lot of BSA work, a lot of cannabis work. We've been doing cannabis audits for about 4 or 5 years now. So really when we started pushing that, prior to that, I was with a couple $1 billion credit union where I helped develop and start a cannabis program and did a lot of that work back 2018 after the Farm Bill. Started with some hemp accounts, built it into a successful cannabis program that is still active with that institution today. Besides my work at the firm with Wolf & Company, also a adjunct professor at a local university where I teach courses in compliance, computer technologies as well, and a volunteer fireman on my free time. So actually the deputy chief of the fire department where I live. So that's a little background on me. If we go to the next slide, I'll talk a little bit about Wolf & Company as well. So I think we're celebrating 114 or 115 years now. Someone could probably check my math. I think we're at 115. Again, started in the Boston area, still call that headquarters, which is awesome. I get to travel there about once a month, go in the office, see everybody there. We do specialize in the financial institution world. Our compliance group is about 30 people. As a firm, we're about 400 strong right now. So we do everything a typical CPA firm would do, from financial assurance, we do SOC reports. We actually have a huge niche in the healthcare world, and then we do some large client wealth work as well. But really cutting edge technology. We have our own software as well that works with risk assessments, more of your risk management based ERM type software as well. But again, I specialize really in that compliance area. So that's a little background on Wolf & Company.
Yeah, and I know Wolf & Company has a great reputation. I was down in the Connecticut area doing a presentation for a Bankers Association there, and you had a big presence at that, and people spoke very, very highly of Wolf & Company there. So all the more reason why it's great to have you with us. And thanks for joining us, Ryne.
Awesome. Thank you.
Yeah, we can move on to the next one. Yeah, just a few words about me. I am a former financial regulator. I worked as the attorney for the Maine Bureau of Financial Institutions for about 7 years. During my last year as a regulator, that was 2014, as probably everyone on this call knows, that's the year when the FinCEN guidance on marijuana banking was published. And even back then, I was getting questions from our regulated entities about marijuana banking and what the FinCEN guidance meant then. In September of 2014, I jumped ship and worked at like Ryne, worked at a credit union for just about 10 years. And during my interview for that position, I asked our CEO whether he had a cannabis banking program, and a very worried look came across his face. I was still wearing my regulator's hat. And he said, "Well, I think we've got a few of those accounts." And I said to him back then that I fully support having a cannabis banking program, but we've got to develop that so that it's fully compliant. So anyway, on the way home from that interview, he called me and offered me the job. I think he was a little bit worried I was going to go and report back to our superintendent. And so anyway, we developed a full-fledged cannabis making program at this credit union. It grew exponentially while I was there. No credit to me whatsoever. We just happened to be the only game in town, and we got a lot of kudos from our cannabis uh, members there for having the willingness to take a little bit of risk, to go out on a limb, and support these folks and give them a trusted financial partner. For the last 2 years, I have been at Cogent Law. Many on this call may be aware of the PBC conference, which is held in early September every year down in Washington. And one of the partners of Cogent Law, Joshua Radbod, he is the one who organizes, oversees that conference. Anyway, we Ryne and I crossed paths at the Shield Connect. I crossed paths with Josh, and it just so happened that Cogent Law was looking for an attorney who knew a thing or two about cannabis banking. And so anyway, I've been with Cogent now, as I said, for 2 years, and have been focusing my practice on consulting with banks and credit unions across the country on developing their. I do one of four things. I help them get into the cannabis banking space, help them expand into lending. I've worked with a few that have gotten into a bit of trouble with their regulators and have needed some remediation. And then I've worked with a couple that I have very well-developed, mature programs, but they've kind of gotten bogged down with some inefficiencies and are looking for ways to become more cost-effective, but at the same time, staying on the right side of the line with their examiners. So those are the sorts of things I do. I'm kind of on call if a BSA officer has a particular question about a cannabis-related SAR filing, that kind of thing. I do pride myself on getting back fairly quickly with folks. And Cogent, we've got a cannabis banking department. We've got a few attorneys who specialize in cannabis law. We also have a very large cryptocurrency practice. And as well as a general corporate commercial practice. Many of our attorneys, they've come from big firm practice and wanted to become more focused on their clients as opposed to their firms. So that's the background of a lot of our attorneys. So it's been a good fit for me. I'm very happy to be at Cogent. So I think we can move on now, Raphael. Yeah, so we wanted to talk a bit about, the important things to consider when a financial institution is starting its cannabis banking program. And Ryne, one of the most important things, again, putting my regulator's hat on, is making sure that your board is kept fully apprised of the risks associated with cannabis banking. Do you want to say anything about this, the board involvement?
Yeah, absolutely. I figured by now we would have a little switch in this where the board would be, on board from day one and know all the information they need to know. But looking back now, 8 years ago, having that first conversation with the board, I'm still talking to some of my clients and even prospects where the conversation is exactly the same, especially if you look at the credit union side with supervisory committee, right? Sometimes they're volunteers, so they're maybe a little bit less paying attention to all the news out there, paying attention to the credit union world, maybe not the cannabis space. So I think those conversations need to happen early on. Like, hey, are we interested in this? What is our risk appetite for banking cannabis? What's different between 2018, 2022 is A lot of that's already out there documented. I know some of the initial things we had to do that we told the board we were going to do originally was okay, we're going to talk to our insurance providers, we're going to talk to our regulators. They're probably not going to put anything in writing, but we're going to talk to them. Now that part's pretty much done. Still would recommend doing it, but you won't be the first person asking, your insurance company, hey, can we bank cannabis? What's your feeling on this? You won't be the first one going to your regulators, but those steps are still important to show your examiners, hey, we talked to all the relevant parties, we got the board approval, we talked to the board about the risk. That initial conversation really needs to be a plan, right? Here is our cannabis banking outline, what we're going to do. We may stop at any point when we get a roadblock that we don't want to go past. Maybe our appetite isn't okay with that. But at the first point, I think it really is important to sit down with the board, give them a small education, right? Hey, this is what it is. Do they need to know the exact amount that a pre-roll can be sold on a Thursday? Probably not, right? But what does the state allow? Are you going to do multi-state, right? Probably going to start with just your in-state first. But what does that program look like? What does the licensing look like? What's that process? What does a potential customer member have to go through to get that license? I think it's really important to know to the board that it's not just, hey, they go sell cannabis tomorrow, right? There's a process. There is some regulation behind that, usually at the state level. So I think that's one of the first steps to really inform that. You can call it a board education as well as really understanding what their appetite is.
Yeah, I couldn't agree with you more. The board education piece is really important, and also showing that your board is educated, making sure that the board minutes are, reflect all of that. One of the first things that examiners go in and look at are the board minutes. And I attended I attended virtually all of our board meetings, and as the BSA officer, it gave me an opportunity to update the board on our cannabis banking program. I would often kind of insinuate myself by just making small changes to our policies, which of course always needed to be board approved. And one of our policies that was always changing, evolving was our cannabis banking policies. We had two or three of those, and that always gave the board an opportunity to ask questions about how the cannabis banking program is going. In addition to that, we at my request, we had two of our BSA managers come on a yearly basis and present to the board in a kind of a more formal way on the cannabis banking program. So that is one of the most important things that examiners, regulators look at. They also want to make sure that and again, this is particularly the case in the credit union world where Ryne and I come from, is that the boards are made fully aware of the risks associated with cannabis banking. There are, for those of you who've heard me before, I think of the risks kind of in three major circles. There's the BSA compliance risk, which I think is probably the biggest circle of risk, where you can get marked down on your BSA CAMELS rating from satisfactory to an unsatisfactory, which will likely affect your management rating. And then and you can get some pretty serious violations from your as a result of your cannabis banking program if you're not following the FinCEN guidance. The second area of risk that the board needs to be aware of, and again, these two areas of risk I think are smaller. One is reputational risk. And I think as the years go by, that reputational risk diminishes. There obviously, used to be a stigma attached with cannabis, and therefore there was a stigma attached also with folks associated with the cannabis industry. Ironically, we actually found, and Ryne, it'd be interesting to get your thoughts on this. We actually found that our decision to ban cannabis was, if anything, probably a slight reputational enhancement. We didn't have any of our members leave the credit union because of our cannabis banking program, and we got lots of kudos from our cannabis members for our decision to ban cannabis. What are your thoughts on the reputational risk?
Yeah, exactly the same. In the beginning, we definitely had some war room discussions where some of the board members, supervisory committee were like, well, we're going to be known as the pot credit union and people are going to be running, taking their money out. And that never happened. Did we scream it from the rooftops day one? No, we went into it slowly, methodically, because, managing the risk, that's what I wanted to do anyways. From a reputational standpoint, no harm at all. If we lost a member or two from it, they weren't vocal about it. They didn't tell us. And it really took a couple years before the program was fully developed, where started advertising it more. I mean, they would go to local, trade events and let them know that the credit union was banking it. Now it's on the website, and a lot of my clients that I deal with, they may not call it marijuana banking. Some call it like a specialty program, a high risk banking, services, but then they throw other things in there, MSB accounts and third party payment processors. So I think now it's much different. And like you said, the reputational gain, absolutely, especially in the agricultural industry. Hey, you're willing to support this, and you're going to support other things as well. So, and then when you move into the lending space, I think it's the same thing. And I know we'll probably talk about that in a little bit, but same thing. You're willing to lend to that group, helps you in the trade shows and those kind of things from a reputational standpoint.
Yeah, thanks for that, Ryan. And I think that just moving on, I think, the third circle of risk, and again, it sounds strange coming from an attorney because I do think this is a small circle of risk, but that is the legal risk. There are some technical arguments that, on the books, a credit union or a bank is aiding and abetting, creating, uh, uh, that there are potential RICO violations associated with that, as well as BSA violations. I have always viewed that risk as a very small risk, and history is on my side. There has not been any federal or state prosecutor that has gone after a bank or credit union solely for banking cannabis. And there are very, very cogent policy reasons for banking cannabis, which are pro law enforcement. You're keeping money, you're safely vaulting that money, creating safe neighborhoods, so forth and so on. So I've always viewed that risk as a pretty small risk. Nevertheless, it is important, I think, that boards are aware of that. Ryan, you mentioned, insurance, D&O policies, making sure that your board members are covered. Uh, Given the fact that they are involved in federally, something that is still federally illegal. So one of the things your board needs to be made aware of are your insurance, your D&O policies, and whether or not they're covered uh, when given the fact that they're banking cannabis. Ryan, do you want to talk a little bit about the second point on this slide is taking the long view and what your board and senior management team needs to know about that.
Yeah, absolutely. So it is a process. Again, I think the process going back many years ago was a longer process. Those conversations happen a lot sooner. You can work with firms and have policies and procedures up and running pretty quickly, but really building that background. There is software most likely needed. You need to understand what your state does. Social injustice, right? Are you okay with that? Are you okay with bringing on people that were, previously charged with cannabis crimes or maybe other crimes as well? And is there a threshold there, right? Building that program, and I think like it says here, revenue will follow. I think that's a transition. Revenue in the beginning was fee income, right? Oh, we're going to get $1,200 a month. We're going to get $1,000 a month. I've seen some people doing it for free now, right? Like, hey, keep some money on deposit, lend from us. It's become more of a traditional banking account. Is there a little fee here and there to cover some of the administrative costs? I think a lot of institutions still are. But that revenue now is we have deposits, right? We have deposits, so it helps our liquidity. And I think that's where it's really coming from. From a compliance standpoint, I do see a larger shift than maybe a middle of the road shift from a risk standpoint, right? So I think when we first built these programs, and I'll say we because we both built one, very risk adverse, right? We're going to get all this documentation. We're going to do a site visit every month. I'm talking to some clients now, and they're like, "Do I need to do a site visit? How often?" And obviously, we go back to risk appetite. What do they want to do? And then I always remind them, like you said before, Chris, get in front of your board, get those approvals, right? So if you built the program originally, you're going to do a site visit every month, for example, and you're going to collect all this documentation quarterly. Now you're going to go to both yearly or lower risk cannabis, right? So if we put our cannabis in different buckets, I know they're all high risk. Don't tell an examiner you have a low risk cannabis client, but within that bucket, you may have some lower ones, right? They cultivate, they grow once a year, they sell once a year. Do you need to do a site visit every 12 months? No, no. I mean, at least where I live in the middle of winter, it's a snowfield, or it's, if they're growing inside, obviously different. But make sure that that is part of the board's risk appetite to say, hey, okay, you have the discretion to maybe a large retailer in a major city, you need to be looking at more often, but the once a year grower, because he doesn't have a greenhouse, you don't need to look at it as often. But I think when we originally built those programs, we built them bulletproof, right? We're going to look at this stuff every day. And then the program grew and are like, not only do we not have time and resources to do this, do we need to? Right. And that's what I always like to go back to the client and say, hey, go ahead. If you accept that risk, go for it. Make sure you follow through with all your documentation, your policies, your procedures, and your approvals. So I think that's a good point to keep.
Yeah, that's what I found too. I think at the initial stages of building a program, there's a lot of belts and suspenders being built on the program. But as you say, not every cannabis customer or member is the same. And it's not only the type of cannabis client, but how long that cannabis customer or member has been with the credit union or the financial institution. If they've got an outstanding compliance record with you, they've been with you for 3 years, that might be a good reason to let your guard down a little bit. As you said, Ryne, you probably don't need those monthly site visits, and you can, based on the track record with the financial institution, they're being fully transparent with you, being timely in providing you with the information. The information that they're providing is very, very clear. So I think that's an important point to make. And getting back to the board, one of the points that I think you need to make early on is, you need to be patient. It's going to be an investment in money and time. But as I tell my boys too often, good things come to those who wait. And once you get everything set in place, the revenue will follow from that. So but you do need to bide patience. I think that's an important consideration to make. Ryne, do you want to talk a little bit about the 2014 FinCEN guidance? Your thoughts on that?
Yeah, absolutely. So, follow it, make it the key points to your program. That with the Cole memo, you can send the Cole memo all day. We're still going to follow it. There doesn't a day go by or webinar or presentation we don't talk about the Cole memo, right? Understand it front and back. The FinCEN guidance, the same thing. It's pretty clear what to do. There's not really too much to dissect there. What I see some clients kind of forgetting a little bit or slipping on is like the SAR termination. Make sure those are used effectively and those terms are in the SAR. Some put them in the SAR. I can't think of the field number. It's like the other for such activity. Can't think of the exact number right now, but it does truly state in the guidance that it needs to be in the narrative. Is it nitpicky? Yeah, I'm an auditor now, right? I get to be nitpicky. From an examination standpoint, right, Chris, you've been there too. That's part of the job, right? To look at those minor details. Is it an indication of a weak program? Absolutely not. It's administrative things. So that's typically what we see when we're looking at the guidance and auditing to it. It's more of the administrative, didn't check this box, dot this T. Most of the institutions that are getting into cannabis or have been into it for a while, they could probably recite the guidance to you, everything of it. They're not even looking at it anymore, right? It probably was bookmarked on their browser, but now they understand it front and back. So it's kind of the norm. Just like we don't probably pull up the FinCEN examination manual often anymore after you've been in BSA for a few years. But you remember those first couple of years, you used to be able to get a print copy of it. That's how old I am now. Now there's only a digital copy, but you used to reference it. Now it's like, hey, once in a while, some minor detail you need to go dig for. But yeah, I think it's pretty straightforward on what banks and credit unions need to do. And I think they're following it pretty well. I mean, we don't really see institutions that have really really bad errors there. We don't see examiners really doing many issues or exam findings or even more severe actions really on the cannabis side, unless they're completely just ignoring it, right? If they're treating it like a regular company down the road, yeah, they're going to get in a little bit of trouble for that. But I really haven't seen that yet. I don't know if you have, Chris, but I mean, I feel like the institutions that are getting into it, they're spending the time, like we talked about before, getting prepared for it. They're not winging it last minute.
Absolutely, yeah. And there's so much education such as this, and the conferences and the events on cannabis banking, and also there are educational programs online with the Association for Cannabis Banking, for instance. PBC has an educational qualification program. Just getting back to that FinCEN guidance, you're absolutely right, Ryan. Those SAR filings, that's very, very low hanging fruit for the examiners. Again, making sure that you're, filing those correctly. And when I say correctly, I'm talking about timely and completely accurately, and making sure that you're filing a priority filing when you should be filing a priority filing, and a termination filing when you should be filing a termination filing. Those are, and again, a lot of that is going to be based on, there's no, one of the inadequacies is probably too harsh a term for the FinCEN guidance, but the FinCEN guidance is just that. It's guidance. It's not a regulation. So you're not going to find definitions there or official staff commentary behind the regulation, which kind of explains what some of the regulations mean. So there is a little bit of ambiguity there. And, my experience is that, what the FinCEN guidance meant to some examiners 12 years ago is that kind of has evolved over time. And I think one of the reasons for that is, examiners, as cannabis banking programs have developed and evolved, the what examiners are seeing best practices in certain financial institutions, and they're going to the next financial institution and they're making recommendations based on the best practices that they're seeing. So that's something that your senior management team needs to be aware of as well. So yeah, I think we've talked about best practices and regulatory expectations and understanding what that means. I think getting back to that, if you're going to be making any changes to your cannabis banking program, in other words, taking off some of those belts and suspenders, I think it's really, really important to document the reason why. Because again, examiners, what they're looking for is, is what the credit union or the bank doing reasonable? And if you can explain away why you're doing such things like, you know, um, taking off taking off the requirement for frequent site visits. My experience with examiners is that they want to help you stay within your guardrails. They're for the most part, examiners are not kind of gotcha folks. They just want to make sure that the bank or financial institution is staying within their guardrails. So always document why certain changes are being made to your cannabis banking program. And again, the best place for that, I think, is in the board minutes, because that way you've not only documented the reason why, but you've explained the reason why to your board, and you've gotten board approval for that, because it's very likely that those changes will be reflected in one of your policies. Okay, I think we can move on to the next slide, if that's okay with you, Ryan.
Yeah, absolutely. One thing I'll add to, excuse me, to the site visit thing you're talking about and documenting that. I've also seen a phased approach to that as well, where okay, hey, new client, new customer member, we're going to do site visits X amount of time, and as they're good positive site visits, no concerns, we'll stretch that timeline out. Probably a little bit more on the management side to understand, hey, is this on a yearly frequency or whatever. And then multi-state operators, I have seen where a lot of clients in the beginning. We're going to do a site visit on multi-state operators to really get to know that business, understand what's going on. We've seen virtual site visits as well when appropriate is a virtual one. Do you have the correct staff to do a site visit? Are they going there and filling out a checklist? They have no idea what they're looking for. So I think a lot of that goes to document or come up with a third party that does those site visits for you, and there are some out there for sure.
Yeah, and in fact, there are some third parties out there that will allow you to do site visits remotely. In fact, so that's an important consideration for banks and credit unions interested in expanding their cannabis banking program to multi-state, for instance. That can create a real efficiency. One of the things before we go on, I neglected to do some housekeeping at the very start of this, and this Ryne and I were thinking that this would go for about 45 minutes and that we have a 15-minute Q&A. And there is a Q&A section for folks if they want to put their questions in that. And please don't be shy with your questions. I think Ryne will agree with this. There is no such thing as a stupid question when it comes to cannabis banking, because a lot of this stuff is not, you're not going to find it written down. So that's very, very important. So let's talk a little bit about this slide here. I think this is another really important consideration about who's calling the shots. Ryne, I've worked with a couple of financial institutions where there's some real tension between the business development team and the BSA compliance team, and they're kind of always they're at loggerheads. And one is always wanting to push down on the accelerator, and the other is always pushing on the brakes. I want to talk a little bit about that.
Yeah, absolutely. So as spent 10 plus years as a BSA officer, we're always pushing the brakes on everything, right? That's actually one of my first jobs. Someone in business development said, I'm going to play sabotage every time you walk in the room because you're going to tell me my ideas are bad and scary. I'm like, no, we're going to work together and figure out a solution. I think this goes with any institution. The BSA officer needs to have that direct line of communication to the board and senior management if they're not senior management themselves. Obviously, building the program and designing it so it's regulatorily sound and meeting all the requirements is the BSA officer's responsibility. I do have some clients where cannabis banking lives next to or outside of BSA, but they're large enough where it works together. I've seen it where it's run by the legal department in a couple of institutions as well, but that person happens to have a lot of BSA background. But typically, I'd say it lives as a subsection of the BSA department, which I think works well because we're doing BSA things, right? We're filing CTRs on the cash, we're filing the SARs as the guidance tells us, and we're used to doing that enhanced due diligence anyway. So I think it makes sense there. What I do see where that falls apart is when it works when business development is running the show, right? When we're going to open up X amount of accounts. This account's 1,000 miles away, but he's a good guy, right? And we're going to open it. If there's any commercial lenders on the phone or on the call, I'm going to apologize, but commercial lenders are the worst, right? They're like, oh, well, he'll pay his loan. His father's the cardiologist in town. Or same thing with cannabis, right? Like, oh, well, he's run a successful, construction company for 20 years. Like, okay, that doesn't mean he knows how to sell cannabis. Maybe he was selling cannabis too, but does he know how to sell cannabis legally, right? Those conversations need to happen. On the business development side, I really strongly feel that someone with that BSA background needs to be involved in that process from the beginning. Get that comfort from the customer member that they know what they're getting into. This isn't just opening up a smoke shop, right? There's a lot of regulatory hurdles they need to jump through. There's a lot of documents that need to be sent back and forth between the financial institution and the customer. If they're not ready for that, that's not going to be a good relationship at all. So I think that partnership needs to work. I've seen some institutions where it's a committee. So business development goes and gets an application, and there's a committee that approves it, which may be someone from a CFO standpoint, like, hey, do we have the capacity to offer them the services they want? Do we want that type of deposits? Same thing on the lending. Do we have that money to lend? And then someone from obviously the risk management side, whether it's BSA or chief risk officer from, hey, did my team do the right due diligence? And then the business development side obviously has their vote as well. But I've seen a lot of committees where it's that grouping. And I think that provides really good framework to bring on customers and members that make sense to that institution, right? We can all go out. They can all go out and bank cannabis clients from all over, right? They could figure that out, but does it make sense to that institution right away, right? At least start small and then build further and further. But I think definitely the collaboration between those two is imperative to having a successful program. One can't run it without the other. Because if BSA ran it, we probably wouldn't have that many accounts, right? We just keep everything risk adverse and let's just, stay away from it. So I think it is a good blend.
Yeah, those are all great points, Ryan. I often liken it to being on a ship. You've got the pilot's room. They're always asking for more power from the from the chief engineer down in the hull of the ship. And the chief engineer, he's always worried about, or she's always worried about, pushing the engine too hard and having something go wrong with the engine room. But you have to realize everyone's on the same team here. They've all got the same goal to get to port safely. And so there has to be a mutual understanding between the objectives of each department. And I'll take Ryan. I think you've very eloquently kind of put the concerns of the BSA officer, first and foremost. But there's obviously banks and credit unions, they are looking to generate revenue. And so it's important for the BSA team to realize that, something that this might be within the risk appetite of the overall institution. Just going back to the BSA officer's authority, one of the real risks I think that's often overlooked is in the cannabis lending space. If your cannabis customer or member, things start to go pear-shaped from a compliance perspective with your cannabis customer, and you've got an outstanding commercial loan, and all of a sudden the BSA officer really feels that a termination filing is warranted, that presents the financial institution with a real conflict between fulfilling its BSA obligations and its commercial objectives. And one area where I do think the BSA officer does need authority over is on the SAR filings. Now, when I was a BSA officer, I don't know how it worked for you, Ryan, but there were a couple of times when I felt that a termination filing was warranted. We never got into the lending side, so this didn't present too much of a problem for us. But even before we made that determination, I would get all of the information, not only from within our BSA department, but also talk to the business development folks to make sure that before we terminated the relationship, I had all of the facts at hand. That was very, very important for me. But that independence of authority with the BSA officer, I think, is critical. And again, something that is going to want to be reflected in your BSA policies and reflected in practice as well. And again, that's something that is going to be first and foremost with your regulators when they come and look. But then again, I think the BSA officer needs to appreciate and understand the risk appetite of the board and senior management. I think another good example of that might be when a financial institution is considering getting into cannabis lending, for instance. Ryan, what are your thoughts on that?
Yeah, so what I've seen on the cannabis lending start, so most of the time, right, we start the deposit accounts, we get that program up and running, and naturally they start asking for loans. What I've seen a lot of institutions do is really start with the unsecured loans. Start small, again, just like the deposit side, right? We're not going to go to the multi-state operator day one, commercial loan. We're not going to, maybe fund, an actual plant touching business with collateral day one. Maybe we'll do small $50,000, $75,000 line of credits, which we're basing that just on the owner equity as the guarantor for the loan. And then they slowly move into more of the commercial loan space. The real concern, and from a legal standpoint, Chris, you could probably explain this a lot better. The real concern is the collateral, right? Is there collateral to collect on? if that loan goes upside down, right? And how does that work? And by means, I'm not the expert in that space, but I've seen that happen where they do go into smaller loans first, right? Let's do the unsecured, and we'll work our way. If it's a commercial building, they want to lease the out. That's pretty easy. That's a standard loan. The money comes from cannabis, but you're already okay with that from the deposit side, so it doesn't make it different. There's a building, right? There's a piece of collateral. But Chris, have you seen some concerns with actual cannabis product being collateral, and how does that work?
Yeah, great points, Ryan. And on the cannabis lending side, the risks. I've always viewed the risks on the cannabis lending. If you've got a compliant depository program, in my view, the real risks, if you're going to expand into lending, are the collateral and the underwriting risks, given the market. So, those are decisions that, but at the same time, I think you're also going to want to confer with your BSA officer to make sure that, from a compliance perspective, that this, that you're going to want to take the cream of the crop, I think, when it comes to cannabis lending, and you're going to want to make sure that your BSA officer has a comfort level uh, with extending financing to a particular cannabis member. We've talked already a little bit about instilling that collaborative approach between departments. The onboarding. I think the onboarding process, and Ryne, you've already talked about this. This is where the business development department and the BSA department, they're often, I think, at loggerheads. And it's very, very important to develop a collaborative approach between those departments. Again, when I was at my FI, initially the onboarding process was all through our BSA department. And then toward the end, we actually delegated that to somebody within our business development team. But the onboarding documentation and questionnaires, they were always vetted by one of my BSA managers first before we got the approval to open that account. That's kind of how it worked. And a lot of times, our BSA manager, they would go back and say, hey, we need a little bit more detail on this. He hasn't really answered this question directly. So that collaborative approach, I think, is really, really important. So, we've talked about lines of authority too. So, okay, I think we can move on to the next slide here. Yeah, communication is key. I think, Ryne, you'll probably agree with that. And we've touched on a lot of this before, but Ryne, maybe you can speak generally to the importance of communication.
Yeah, absolutely. So talked originally about let's get the board on the same page day one, right? Because they might say, yeah, no, we're not really interested. Deposits don't. We don't need the deposits. We don't need the risk. We don't need the headache. Sure, that's totally fine. But if they do say yes, and now you have a successful program, what is that cadence of board reporting? What's required to go to the board? Um, this is just Ryne's opinion. I would say at least quarterly. There needs to be some type of
Yeah.
notification to the board. Hey, this is how many stars we fell. This is how many terminated. With the option to go to the board anytime in between there, if the board meets monthly, and there is an issue where you're terminating an account and they may need to notice the ramifications of it, whether it's reputational. I'll be honest, we terminated an account and a client went right on LinkedIn or a customer at the time went right on LinkedIn and blasted me and tried to tag me in the post, and that we were discriminating them, and there's all the things that behind the scenes I wanted to type, like, yeah, he provided us with no documentation, and there's probably illegal activity going on, but hey, we just smiled at it and moved on. So obviously at that point we'd want to let the board know quicker than our normal cadence. I would say an annual report that summarizes everything is fine, but if you're only reporting to the board annually about the cannabis accounts and the activity, again, my personal opinion, I don't think that's enough. I think it needs to be constant, frequent, and I would prefer it to be from the person doing the work, right? It should be from that BSA officer level, not passed up through 17 people and someone's reporting it that really doesn't understand the day-to-day operations and the challenges and struggles that they're going through, because that doesn't give a clear picture to the board either. If you're just throwing numbers out there, we have we have 150 accounts. These are the balances. We filed 17 SARs. What does that say? Like, what's the next step? Is there what's going on in the industry? What's the next approach? Where are we going next? How many multi-state operators do we have? Are we going into lending? What do the lending look like? What changes have we made? Right? It needs to be more of a detailed approach for sure, and that keeps them apprised of all the risks that are happening today, what's going on tomorrow, and then where we've said, hey, we thought this was really high risk, but we've had really good success with this, so we're going to move forward with those changes. So I think it's really important to do frequent touch points.
I couldn't agree more with you, Ryan. And yeah, I would also agree that annual reporting on cannabis banking is too infrequent, and I do think that I would subscribe to your quarterly reporting. And again, even if you're attending the board meetings and you're the BSA officer as I was, you can report even more frequently to the board and give the board opportunity to ask questions. I would actually draft my what I said to the board. I would draft what I said to the board and send it to the secretary so that the BSA part of the board of the minutes were pretty detailed. And the secretary always really appreciated that, but just something to keep in mind.
See, I had it the opposite way. The
Okay.
secretary would send us her notes, and then we would edit them and add anything we needed. Like, oh no, I also said this, and it's really important. So you may have missed it, but it needs to be there. So same thing, right? You want to make sure those more board minutes capture everything that's critical.
Well, Ryan, it has been great presenting to you. I think, is that the last slide? Can we go on to the next slide? Oh, implement. We still have one or two more slides here. So we've talked a little bit about this. I do want to be mindful of people's time and respectful of people's time. And I do want to allow for some time for questions, but, just some points here, making sure that your BSA and compliance departments are working efficiently. And, there's implementing efficiencies doesn't mean compromising on compliance. Ryan and I have already talked about, that, initially starting with that belts and suspenders approach, but then, finding areas where, certain areas of risk are less important than other areas of risk and managing that risk appropriately. The importance of using third-party software providers in compliance banking. There are a lot of them out there, and they have taken a lot of the legwork out of cannabis banking. So that's another efficiency that can be developed with your FI. I've already talked about prioritizing the important risks over the not important risks and delegating work appropriately too. I think that's an important thing. When I started at my FIR, BSA department was a department of half a person. That was me. And so I was doing everything. I was coming in the next morning. I was interviewing, drafting the narratives the next morning, blah, blah, blah. And by the time I left, our BSA department was a department of 8. And, having trust in your managers and your BSA analysts to do the work that they're doing so that you didn't have to do all of it. And then also, and Ryan, this is this is your alley here, making sure that your program is audited effectively and appropriately.
Yeah, and I'll add to that. What I typically see a separate cannabis audit, truly, and that's not just me trying to sell a separate product. A BSA audit typically in scope might review a couple SARs that have marijuana limited in them, something like that, but it's not truly diving into the onboarding process, the EDD, the monitoring, the cash control. So typically a specialized specific cannabis audit is really industry best practice at this point, that you're doing that as well if you have an active cannabis program.
And Ryan, I don't want to embarrass you, but you're probably uniquely qualified in that area, given the fact that you developed your own cannabis banking program, and now you're in the audit world. So you can
Absolutely.
probably they see things that a
Yeah,
lot of other
myself
auditors
and
do.
my staff are very versed in it. I'd say we're doing a cannabis audit every other week. At least some of my staff is. So we have a bunch of clients out there we're doing it for. It's a well-oiled machine. And what really helps by having a lot of clients doing it is we're seeing when we say industry best practice, that isn't Ryne just sitting around thinking it up, right? That's not only me seeing multiple programs, building my own, going to conferences, speaking at these types of events. We really know kind of what's out there, what's the expectations of the examiners as well. So, um, I will sell that and say we do provide a really good product on the cannabis side as well as the BSA side where I specialize.
Yeah, thanks for that. Maybe we
Absolutely.
can move to the next slide. Okay, good. We're here, much to my relief because we've gone a little bit over our time. So, do we have some questions in the Q&A? Yeah, here, let me open up my Q&A here. Okay, Casey Watson. Let me just make sure I'm asking. Okay, how big are the cannabis? Is this the first one? Here, wait, maybe scroll down to the.
Yeah, it looks like the first one on my side.
Is that the first one you're on? Yeah. Okay.
Yeah,
How
I think
big
that
are?
question came through when we were talking about working with the board. And just to
Okay,
clarify, you're
yeah.
talking about the board of the institution you work for, right? So if you work for a financial institution, working with the board to make those decisions that, hey, this is a road we want to go down. We want to start looking at cannabis banking.
Yeah, that's right. Yeah, yeah, thanks for that clarification, Ryan. Yeah, we were talking about the boards, the FI boards, not necessarily. I do think, one of the, particularly if you're getting into the lending side, you're going to want to make sure that the cannabis operator has somebody with some financial acumen. That's an important thing, but no requirement for them for the cannabis businesses themselves to have a board. So I hope that answers that question.
I'll add something to that while you're reading the next question, Chris, in your head.
Okay.
So I'm gonna let you take that one. But what I've noticed too on the cannabis side is some of these businesses, some of the people going into this business are not familiar with running a cash intensive business, and then next day they're running a dispensary. They don't know that, hey, I need change, and I can't just go to any financial institution and ask for a boatload of change on a Friday afternoon. They might not have it. So some of that stuff, some of that education, make sure the business development team really spend some time with people that haven't dealt with a cash intensive business before, and some of the things that they're going to have to think about to run that business. Some of them are, construction companies, I'll go back to that, right? They would take a check at the end of a job, they go deposit it the next day. They really need to pay attention to kind of how that business structure is now.
Yeah, thanks for that, Ryan.
Yeah.
So the next question is about lending. What's your experience with here, wait a sec, I just missed the question there. Yeah, lending products for cannabis businesses, both state-supported and non-state-supported lending that includes operating capital, lines of credit, et cetera. So what I am finding is a lot of my clients are still on the fence when it comes to lending. They're debating whether or not to get into lending. Some of my clients are interested in dipping their toe in the water with lending, offering smaller commercial lending products, lines of credit, up to 250 or $500,000, and seeing where that goes. There are specific, as Ryan and I touched on earlier, there are specific risks associated with certain forms of collateral. And that's something, you might want to reach out to an attorney. I can talk to folks about that. And, you're also going to want to talk about whether you're going to accept tangible collateral versus intangible collateral, like licensing. You're going to want to make sure your agreements deal with the fact that, in the event that things go downhill, if the loan needs to be called, that bankruptcy is not going to be an option for your financial institution, but there may be receivership, state sponsored receivership opportunities for that, and you're going to want to make sure that your loan documents support all that. I for one, am a big favor of having a standalone side agreement uh, with together with your standard form loan agreement that details a lot of this stuff, and also outlining, when, in what instances your financial institution has the right to call the loan. And in particular, you're going to want a bad boy clause in there if they're not following the compliance requirements. Okay.
Chris, I could take the next question if you don't
Yeah,
mind.
yeah, go for it.
So, our opinion at Wolf and Company on the marijuana limited SARs do not apply to tier two and tier three, with one caveat. I'd say if you get a little careful with the tier two ones, if a lot of their business comes from directly from plant touching businesses or a subsidiary of one, and you don't have the account for that, you may want to file on that so it's noted. But typically, especially tier three, you have a commercial loan and they're leasing 5% of their property to a dispensary. I have not seen the need or believe that the regulatory guidance really says you need to file those marijuana limited SARs on those. So there's nothing suspicious. They're not plant touching. It's not more than 50%, and it's not some super close relationship that you want to report on. I would agree with the anonymous attendee that is clutter and probably not needed. And it looks like Chris is nodding with me and he agrees.
Yeah, I agree with that. Initially, I think we were reporting on some that were very closely associated with with a plant touching association. Uh, but again, there is no regulatory need for that, and in fact, we stopped doing that because, again, we wanted to develop efficiencies within our program, and that was one of the we did, for those tier two, tier three folks. We did enhanced monitoring for those. We set those up for quarterly monitoring to make sure we weren't seeing anything uh, that was untoward. But those accounts were, frankly, pretty easy lifts for our BSA department. So, yeah, I agree with the question on that.
Yeah, I've had some clients filing marijuana limited on a consumer who works at a dispensary, and I'm like, you probably don't need to do that. Probably just creating yourself more work for yourself for sure.
So, this is a great question, this last one by William Keys. How comfortable would a bank be offering up intellectual property assets as collateral? Again, intellectual property is within the realm of federal law, not state law. I, for one, wouldn't feel terribly comfortable doing that. Again, it's not tangible property either. So there are other considerations like LTV value, and the profile. But I would think long and hard, very long and hard, about accepting intellectual property assets as collateral for a CRB member. Great question. Great question. Okay, I think we've come to the end of our presentation. And Ryne, I'm going to congratulate you and me because we've stayed within our hour time. Ryne, again, it's been a great presentation with you. I really enjoyed this. Again, Ryne and I met at this conference, and Ryne did a wonderful presentation down at the Shield Connect conference down in Boston. And after he did that presentation, I said, I got to get together with Ryne and do a presentation with him. And so, Ryne, I'm really, really glad we connected. It does show the importance of going to these conferences too, by the way, just making these connections with folks. And I want to thank everyone again for attending and listening. Great questions. Really appreciated the questions. And everyone, have a great day. Thanks again.
Thank you.
Bye-bye.